Hello, 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 everyone. Mike Arnold here, co-founder Path Trading Partners, along with soon to be on Bob, the T-shirt man, Iachino. So, you know what? Did I show you guys his T-shirt collection, or did I forget? I know he texted it to me, but I might have forgotten. Did I forget? Please remind me. In my old age, after celebrating another birthday, I don't even know what day it is. Besides, it was Powell Tuesday. Good afternoon, Davey. Hello, hello, hello. What a day. It can go over 4,200 by tomorrow and roll over. It's entered the potential rollover zone. Good afternoon, fellas. Quite the Pow day. Don't you mean the Powell day? Good afternoon, Sashi. When's the next Fed hike day? The next Fed hike day, if you go to the CME Group Fed Watch tool, you can always check it there, is 15th of June. So still, 92%, 50 basis points. You can see here, very big day, except for consumer defensive. Walmart just getting spanked. I could not believe how much that got crushed. Nice move in the mega caps. Again, I've got people reaching out. Well, it's bearish. It's bearish. Why is it going up? Because you got to follow the probabilities in the trades before the next rollover. We still are in negative. Gam, I can't show the chart right now. They're doing some maintenance on it. But economic calendar, we also had the housing numbers come in worse than expected. And the big thing was Powell's speech this afternoon. You know what? Without further ado, I'm going to bring on Bob in 1 second. After the close here, just for the point of complete list, nothing that I'm watching, but let me know after Bob's done if you want me to call up anything. Tomorrow morning, though, I'm paying attention to Target and Lowe's. We had Home Depot pop and drop, and Walmart today just getting absolutely crushed. So, with that, speaking of crushed, let me bring on Bob.
What are my T-shirts? Did you do
Where
that?
all right, I gotta find your damn T-shirt collection. Here we go. If you wanted to see, I know it was asked on a prior live stream. Bob's T-shirts, I still have them right here. Bob's T-shirt collection.
I
Look
wouldn't
at
call it a
that.
collection. I would
Look
call it a
at that.
stink. I would call it my absolute wardrobe.
Color coordinate. I mean, mine are. How do you color coordinate tie dyes though? Because
There's always a main color, Mikey.
some of them it's a little too random. But there, look at that. If my closet only looked like that.
That's one of them. The one below is also T-shirts, and then there's another closet.
Did you? Okay, really? Here we go. There, you can sort of see the ones below. I see
Those are
some.
more.
I see some dress shirts down, or more dressy
Those
shirts.
aren't dress shirts. Those are more workout shirts, and those other ones are like shirts I would put over a T-shirt. So they're still T-shirt focused. I have a whole other closet with T-shirts and then dress shirts in
Do you
there.
know you have way too many clothes?
I need T-shirts. What am I going to do without T-shirts?
How are you going to wear that many? I can wear the same 7 shirts every week and just rotate them.
According to Wavy, the youngsters would say I got drip.
You
Should we do
got
my sneakers next?
Bob, the youngsters. I've never heard. What's drip? I don't know this. I'm.
It's drip, Mikey.
What don't I know? Well, there's lots I don't know. I obviously don't know the new rules of M&A, so it used to be pretty straightforward, but not anymore.
Nope.
So, here, well, let's see.
I
Well,
waived due diligence. Just kidding.
you signed the deal before, and you exclude due diligence clauses, and then you complain about it.
I
Uh,
think he actually had written into the final deal that he needs the bots to be proven, but the rest he waives due diligence on everything else.
yeah. Bob, did you rate Powell as hawkish?
No. Well, yeah, I mean versus Powell, sure. Sure, versus Powell. I've always feel like you have to rate hawkishness and dovishness versus where the rest of the committee is. So when they're all hawkish, which really the only one who's not hawkish, I would say, is Bostic, and he is not a voting member, so I don't care what he is. He's the one who is already out there saying that they have to see the effect of the first 2 or 3 rate hikes before they get more aggressive, or he thinks they should do that. So I would say no, I wouldn't classify him as hawkish because he's late to the party. But in fairness to him, he waited until he was nominated to start talking about fighting inflation and waited until he was confirmed for another term before he actually said, yeah, I'm just going to do that. We're going to go crazy and fight inflation. So maybe he was hawkish the whole time.
Question for you, Bob, from Sashi. Can we rely on Powell for a soft landing or a soft-ish landing?
So I consider myself a translator of Fed speak. I really do.
Please do. I need the translation.
So the translation is this. He said a soft landing is dependent on things be outside of the Fed's control. The translation is there's not going to be a soft landing.
But then he said soft-ish. He sort of couched it with soft-ish, but I think it's going to be hard to hard-ish.
How do you get a soft-ish landing? It's either soft or what does he mean? Instead of pillows, we're going to land in slightly pilled dirt?
No, it's going to be like a big thing of raked leaves.
So it'll be like when Sully landed the plane in the Hudson as opposed to on the runway? Is that soft-ish?
I would not call that soft-ish. I'd call it very skilled-ish, but not soft-ish.
Yeah, no, we're going to have a recession. I'm more and more leaning towards that. I texted you a chart, Mike, based again on what I jumped into the live stream and stole 5 seconds of Mike's thunder this morning. He's still mad at me.
I am not mad at. Hey! Don't start the Twitter rumor mill.
You're still mad at me for this.
So,
look, we had a podcast with Ryan Dietrich, and I titled that podcast "Interviewing the Voice of Reason," or I put that in the description or something. Ryan Dietrich this morning tweeted out, with this particular level of retail sales, you can't have a recession with the consumer this strong. Now, I don't have fights with friends on Twitter. And anyone who's been on the podcast, I consider him a work friend. Mike's a real friend, but I consider him a work friend when they've been on the podcast. So I wasn't going to call him out. But I tweeted this chart out, and I tagged a bunch of people, including our friend Mike Arnold in it. And I said, basically, retail sales has hit a new all-time high 1 data point prior to the recession starting in the last 2 major recessions. Now, I didn't include the pandemic in here. And actually, I don't know what it did in the pandemic. I was focused on these two because these two were recessions based on economic conditions, not based on some sort of outside factor like the government forcing a shutdown. So, but these two things you can see here, in both cases, retail sales peaked at new all-time highs. There was not like a steady decline in retail sales prior to the recession officially beginning. There was a 1 data point drop in both of these cases. And then that was the beginning of the recession. Now, there's also times where it peaked and we had a 1 data point drop and didn't have a recession. I'm not saying it's a recession indicator. I'm not saying that at all. What I'm saying is you can certainly have this level of retail sales and have a recession follow it. Brian Westbury, who has agreed to be on the podcast, but we don't have a date yet. He's the head of FT Advisors. First Trust Advisors is the name of the firm. But I remember him from his BMO Harris days. I remember him being a very logical and conservative economist 25 years ago. But he replied to my tweet because I also tagged him in it. All economic indicators are at an all-time high before a recession. I thought that was a great comment because he's right. We're always going up until a recession hits. Again, pointing out to the voice of reason, Ryan Dietrich, who I still think is a great follow, that that's not necessarily true. Mike's still mad at me. You can tell.
Oh boy, spreading FUD. Look at all the FUD on this live stream.
No,
No, but all right. See, wait. Now I know what it means. Bob dripping in high fashion. So that's what drip means.
correct.
Drip. Oh, I guess. Okay.
I
I
have good
just.
T-shirts and bad T-shirts. Like everybody knows, when we go to dinner, I wear one of my good T-shirts.
Do you ever wear anything other than a t-shirt?
Very rarely, extremely rarely.
All right. So, hey, hey, waka waka, soft landing equals bull's dream. Interesting here. Sashi, then he said he will raise 550 basis points if the markets perform as expected, but he has not mentioned what his expectations were. So, what do you think he meant by that, Bob?
He said, well, let me read that again. But he said he will raise five basis points if the market performs
50.
as expected, but did not mention what his expectations were. I don't know what his expectations are. If I were translating, I would say that that means the market doesn't react badly to it and inflation starts to pull back. See, I think, Shashi, I think the thing that Powell and the Fed is relying upon is that the supply chain will ease up and help the Fed with inflation so that they don't have to go 75. Other Fed governors said they have absolutely not ruled out a 75 basis point hike. But I think he's hoping that the supply chain eases up to help him out with this. And it might. But as we've talked about multiple times on this live stream, what kind of help is he going to get? 5.6%? 4.8%?
But that's what I was just going to say. I mean, I could see that if we were, let's say we're hovering like at 4.2% or something. All right, you know, you might get finagle it down into the twos with that. But we're hovering above 8%.
Right. I mean, theoretically, he's going off of core PCE, which is 6.6%. So, okay, fine. You get core PCE down to 3.8%. By the way, I don't think that they say we need core PCE to be at 2% or less. I think they say we need inflation to be at 2% or less. So they can't just constantly change the gauge of inflation. Everybody looks at inflation as being the CPI reading, I think.
Who knows? I'm exhausted. I'm
Yeah,
so
me too.
tired of Fed speak. Question from Wavy. What do you guys think about Walmart biggest one-day decline since 1987? I mean, that is ugly.
Yeah.
I mean, I think it's a little overdone.
I don't honestly understand that move at all.
I don't either.
I don't.
Mean,
That's not, we're at sort of the bottom of the channel, the sideways channel on a weekly that goes back to like August 3rd.
yeah,
So if that
I'm watching.
no one own it, but Jesus.
Well, you know what's interesting is I've been talking longer term. I even have an alert here right in front of the 200 week because I said longer term is going to return to the 200. Little did I on the weekly. Little did I know as we get a lot of the way there in one day.
Is that kind of like a weekly shake and bake, Mike? But you couldn't get in it.
Yeah.
It happened in one day.
Yeah, I mean, this was the selling in this was just, you can see the gap down and then even throughout the day, just relentless selling. I am watching for some kind of, even if we break below the channel, some bottoming pattern, which is not yet. But this, like Walmart's not, actually in recessions, Walmart, even though if they have the compression of margins, because as we talked about this morning, you know, they're making the revenue. Their earnings weren't as good because they're absorbing some of their inflation. They can't pass everything along to the consumer because they're also a discount. You know, they have to eat a little of it. However, Walmart historically does well in recessionary environments because you get more people going to Walmart to shop.
Right.
So I mean, yeah, it got beat up, but you know, can it drop more? Yeah, I'm watching for. I mean, its earnings per share is its P to E ratio is still high. Its price to sales is a little high. So I'm watching for a little more downward price action. It just shocked me on how quickly it got there in one day. One earnings report, what, down 11%, 11.28%.
That's a crazy move for us.
These are the markets we're in, though. I mean, that's why did I have an earnings plan this? I said I was sitting at an earnings plan, both this and Home Depot. But even Home Depot, you know, gap up, filled the gap. and they had strong earnings, and that was beat up. But then you have other things that were just that went to I mean, we get back to the heat map. You just have you have other stuff like Amazon. Walmart's crushed, and Amazon's up 4%.
And you'd be hard pressed to like play Lowe's tomorrow with their earnings, almost regardless of what happens.
Yeah, I
Like
no everything for pretty
would
much
start
unless
a rally if you were going to do anything. But
yeah, unless I'm in something already and have a buffer so I can get my stop to a reasonable place. I'm sitting, especially next quarter. There is no way that I'm unless there's some weird options play where options are being way mispriced and you can put on like a straddle or a strangle like for cheap, and options should and the earnings should either be a big miss or a big blowout, and you can make money that way. There's not much that I want to do with these earning seasons right now. uh my translation of Powell's speech: keep selling until inflation is less than 4%. Good morning or good afternoon, Amit. Hey George, can't tell if this is a chart of Walmart or Amazon. LOL. Well, Amazon today, I mean, up 4%. Amazon just into that weekly rotation zone where we're got that reversal play and gonna keep marching up. Uh,
this is interesting. I mean, obviously, Amazon has their cloud services business as well. So, you're not just talking about retail, but Amazon had a pretty bad reaction to earnings as well. And it's just kind of basing now. And for somebody who really wanted to get into Walmart, you're thinking that long term, this is a good stock to own. This kind of a move today stops you from getting into it today or tomorrow from a fundamental perspective. But watching the price action over the next few days, it's difficult to see it breaking down past the 200, given how successful they've been in inflationary environments in the past. I'm sorry, in deflationary environments in the past, and we're not in that particular realm. They're going to get higher revenues and make less money on that revenue because they don't pass things on. And one of the things you keep hearing is you want to own businesses if we have runaway inflation. You want to own businesses where that inflation can be passed on. And that's certainly not Walmart.
Well, it'll be interesting then looking at Amazon, especially for Q2, because they don't have a lot of, they have their, as you said, their web services and everything else. But in terms, they didn't do well in their sort of their retail shopping aspect of their business last quarter, and they can't pass a lot on either. So they're going to have even, I think, more margin compression going into Q2. So that's going to be very interesting. Hey Lauren, Vixpiration tomorrow. Are you just coining a bunch of new words there, Wavy? Vixpiration? Never heard that one. What else? What are your other thoughts today, Bob? Any thoughts on the other numbers that came out today?
Let's go through them.
Well,
I mean, honestly, retail sales was the one.
we had industrial production up a bit, capacity utilization up, manufacturing production up month over month. So business inventories up, and then you had the housing, which was a retail inventories up, and housing was the big miss.
So the retail inventories was the only thing that struck me, because retail inventories means that the retail sales number wasn't as much about things being sold. Also, you're going to want to watch inventories, as I said last week, because inventories are building up and GDP is still weak. That means GDP is going to be even weaker when people stop buying those inventories up. One of the theories I had last week was that there'd be people in line once the supply chain eased up to buy goods so that companies can't rebuild their inventory. Well, that's not necessarily the case in retail. So if retail inventories are already building, that shows you again that this particular retail sales number wasn't necessarily about people buying more goods. It was about people buying the same or even fewer goods at higher prices, because it's not an inflation adjusted number. The rest of that doesn't matter to me. Housing is going to play out like an ocean liner, right?
Mm-hmm.
I mean, we're already seeing, down here, Real estate companies are projecting 21% increase in home prices over the next year. But that's a real estate company. They always think it's a good time to buy, and they always think housing prices are going up. So I can't see that being the case.
Uh, and inventory is still really tight. I mean, it's slowing
Yeah, they're
down.
still tight.
Still tight. If you need to buy a house or in the market for a house because you sold yours, there's not a lot to choose from.
Yeah.
Let's see. Tomorrow we got more. We got housing starts and building permits. We got the mortgage stuff. We got oil. Any thoughts on oil? It's running up again, and we have Harker speaking. Let's glance at oil real quick. What?
So oil fell from the top of the channel, basically the highs of what you would call that channel's been pretty shaky. It's been pretty. You could almost draw two channels in there, right? One with the high around 115, and the other one with the high around 112 or so. Excuse me. Hey guys, didn't sleep well last night. Um, anyway, you could draw, and that's what I've had on my charts, my crude oil charts, has been that larger channel, and then the shorter channel again with the high somewhere around 111.20, 112 or so. And jumping up to this 115 area, I was pretty excited when we broke 115, but it held. So now we're down four of the last, or I'm sorry, we're up four of the last five sessions. But interestingly enough, that still puts us up almost 12.5% in just these last 4.5 sessions, 5 sessions, including today. So it's still a pretty significant move, not significant necessarily for crude oil, but Germany has said they're going to ban Russian oil. The EU has not made a full decision on that yet. So, but Germany, of course, is the engine of the EU. It's the biggest user of crude oil in the EU. So them doing it likely means the rest of the EU is going to do it. Excuse me. The second part is Chinese refinery utilization, or I should say refinery runs, are down to the levels of the pandemic. In other words, they've converted virtually no oil to refined products, which oil in and of itself is useless. It's got to be refined, right? Unless you're Wile E. Coyote and you're trying to put stuff on the road for the road runner to slip on, you can't really use oil for anything. So Chinese refinery runs are down to their pandemic lows. That means with the announcement that Shanghai is going to start a slow reopening, if the rest of China follows through, you're likely to see China demand start to pick up and in a big way. Right now, China has pretty big reserves, but they haven't made any sort of announcement that they're going to be tapping into those reserves to get refinery runs back up. They may, but the Chinese demand picture is likely to pick up. So, given that we went back down and tested the sort of lower top of the channel, depending on which channel you're drawing, on the lows today, we hit around 111.75, and like I said, that upper part of the tighter channel is probably around 111.5 or so. I say we probably rally back up tomorrow. I don't have a long position, but I say we probably rally back up tomorrow. I think this was a breakout, test at a lower level, and then a breakout again. I suspect we'll get above 115 the next couple of days.
Yeah, it's interesting because we pulled back to the 4-hour rotation zone in the prior breakout area, and if tomorrow on a 4-hour close above 114.18 is a percent B buy.
Oh, I like that.
So again, back to the 4-hour rotation zone, back to, you can see on the daily, back to, breaking resistance. You got this, they're all resistance. That's why I said I can't get super bullish until we get a close below 6250, but I said going in, especially once we broke that 111 the other day, targeting those upper harmonics. We got that little pullback, and now we have another rotation and percent B buy signal potential tomorrow. Potential, not triggered yet.
Yeah, the one thing I want to say before I take off is that from a perspective of what stocks are doing and what crude oil is doing and anything, that you got to look at the dollar to a certain degree. The dollar has been down, I believe, 3 consecutive sessions, today being one of the larger moves. In the last three sessions, the Dow is down about 1.6% against the euro, about 1 point, I believe, 9% against the Canadian dollar, and about 2.5% against the British pound. That's all on, I shouldn't say it's all, but a big part of that is on the basis of the Fed maybe not being as aggressive and some of the central banks being more aggressive, and what's going on with the yield curve in the US. The yield curve had actually flattened or steepened quite a bit while yields were headed lower, which is that'd be a good sign for the economy. If you saw yields go lower, but the curve steepen a little bit, that's good for the overall economy and it's good for stocks because inflation is not what's bad for stocks. What's bad for stocks is the Fed responding to inflation and bringing about these dramatically higher rates at a high rate of speed. So what we saw over the last, well, let's just say over today, is we saw the 5-10 year part of the yield curve go from 4 on the 13th, so on Friday, to 2 today. Two stands went from 32 to 27. Remember, a smaller number is a flattening of the yield curve. A larger number is a steepening of the yield curve. And then we saw the 2s 30s go from 49 to 46. Now the 10s 30s went from 17 to 19, so that actually steepened a little bit. But from the far short end of the curve to the long end of the curve, the yield curve is actually flattened. The weird part about that is the 3-month is moving higher rapidly. 103 on Friday, 106 today, and that yield curve, that section of the yield curve from the 3-month to the 30-year, which is really the entire yield curve, we don't really look at the 1 month, has actually steepened. So what does that all mean? Well, yields are moving back higher. Got the 10-year settling at 298 today, and that's not going to be good for stocks if it encompasses a flatter yield curve. So this is where the yield curve actually matters now, because that means that people are expecting the Fed. They're saying that the Fed's not going to be aggressive enough to control inflation, and that's not something that stocks want to see necessarily.
It's one thing I've never tested out is the patterns on the yield curve, but we do have a potential double top on the 10
So
twos.
I've done some real quick look backs, nothing scientific, and they look like any other chart to me. Look
So
like
that
they
would be
look like
interesting because if
any
it
chart.
gets below 16.7%, it literally targets a return back down to exactly to the lows. I mean, we can't make
Love
this stuff up.
Love it.
That's
Hey, you can see some pullbacks into the rotation zone up there where your
oh yeah.
cursor is right now. Then you can see some 8 pushing the price. I mean,
Yep.
nice.
Yeah, and then we do have a double, and you can look at that. Is even look at the weekly into that weekly rotation zone,
Yeah.
making the double top in the weekly rotation zone. Not yet triggered, but look, I just
Remember, that's what we said was going to happen.
this is why I love technical analysis because
Yeah.
literally, is it playing 100%? No, but it plays out enough of a percent that
Right.
it's once you learn to spot patterns and once you learn really solid tools, the kind of stuff we teach and discuss, it helps you with get a really clear roadmap.
Yeah.
So
And you could see again on that weekly, that's kind of what we said was going to happen with yields. It's kind of why we said, I think longer term yields are going to go higher, but there's plenty of room for them to pull back.
So there we go with that. Anything else you want to comment on before I go over some levels for people tomorrow?
No, that's all I got. Like I said, I expect some strength in the equity markets in the short to medium term, but it's not over yet. I don't think it's over. I'm well entrenched in the recession camp now. I think there's a recession coming sooner rather than later.
So you're up to you're agreeing with me who said sooner.
Yeah. So what I've been saying lately, and you've convinced me that sooner is the way to go, Mikey, is that this particular recession, the Fed is not going to have the stones to not care about. They're going to care too much about it, and they're going to pull back. And that's why I think one of the reasons I think inflation is going to be entrenched. And then inflation is going to be entrenched. And even if we carry on at 3.8% inflation for 2 or 3 years, wages are not going to continue to rise at that clip. Right?
Nope.
They're not. So it's going to hurt people.
Yeah.
Right? it's
That's what's
definitely
going to be interesting.
yeah. And so they're going to have to eventually give in and kind of fight that and try and get it back. I mean, if they say that their target, they talk about their target being 2%, and they say they can let it, one of their so you could always hear these sort of excuses that the Fed puts into their conversations. One of the excuses, in my opinion, was the adjusted average. They said we're okay with a little bit above 2%. We may even need to let it run above 2% for a little while in order to, kind of let things go and let things work themselves out. But like the peak quarter over quarter wage increase that we've seen, employment wages, has been 1.5% higher in, looks like that was October of 2021. Now, they were 1.2% in the last one, quarter over quarter. But I mean, historically, wages, man, it's not, you don't run wages at an up 3% clip. It just doesn't
No.
happen.
So that
So,
means on an inflation adjusted basis, the consumer is going to get farther and farther behind the curve. And here, this is something I retweeted today. I didn't know if you saw this, but speaking of inflation adjusted, here's the inflation adjusted retail sales.
wow.
The red line. And I mean, so you start taking it into inflation adjusted because
Slide it to your right a little bit, Mikey. Yeah, that makes sense.
so look, I mean, retail sales on an inflation adjusted basis were actually weaker. They're back below
What's the
zero.
last data point there? What's the time frame there? Is that
That
just today? Is it?
that came out as of today, I think.
Wow.
Yeah, that was updated with today's retail sales. So that's what I'm saying. On an inflation adjusted basis, it's now back below zero. So it's what we started off talking about. I meant to show that earlier, but it's what we started talking about earlier with, the stronger retail sales numbers were pretty much all due to inflation. So there you go.
In a few minutes, I'm going to send you a month over month hourly earnings chart, and you can put it up. I'm going to go, but it's going
Okay.
to take me a minute to screenshot it and send it to you, but I'll send it to you.
No problem. I
How
will
long do you
put
want it to cover? Last 5 years or so?
sure.
We'll do last 5 years. It'll be easier to read.
All right.
All right. All right,
Okay.
guys. I'll see you
And you'll be
there.
back on Thursday?
I'll be back on Thursday.
Perfect. Thank you, Bob.
All right, guys. Talk to
All
you
right.
later.
Bye. All right, everyone. Small Mike back here. Sorry about that. Let's see. Davey, so I just want to get stuff. Divergence in dollar index good for S&P rally. It's why we can continue. And again, dollar index. Let me just get to a couple things and get through the comments. Dollar index, I talked about, watching even on a further pullback for a reconnection with near the weekly rotation zone, then another bounce. Lauren with a super sticker. Thank you so much, Lauren. Really, really appreciate it. You know how much I really appreciate all these donations, keeping the channel chugging along. Thank you. And I think we do provide a lot of good information, whether it just be from a purely technical analysis standpoint, but then you get to hear Bob's take on, how it looks from more of a fundamental macro perspective. So I think it's really good information. I don't know a lot of other channels that do what we do. Let me know if you have some go-to channels. Lauren just says, great roadmap. Yeah, that's why I keep showing this stuff, because I really want people to start to learn. It's what we talked about. I got so much today, so much crap. Why is the market rallying? Well, here's what I start off with the title even on this video. We're now in the rotation zone. We're now at the 50 to 62. We just entered it, so I'm going to start watching. Doesn't have to happen tomorrow. I'm going to start watching for another topping pattern. Do we have a potential one? Yes, we still do have a little potential one. We have a potential mini double top on the S&P. Does that mean you're going to new lows? No, it could just be another pullback. But these are the kind of stuff we start watching for. Could it push higher tomorrow? Yeah, because this is a long way off. Again, remember, we have that potential pin at 4,000. So now I have a potential pattern to watch. All right. But is it guaranteed it triggers? No. There is no guarantee it triggers. So next, I'll be watching for some potential follow-through price action unless this triggers. AMD double bottom triggers. What's your thought on NVIDIA? Thank you. Happy birthday. Sorry I'm a little late. No problem. We'll get to that, and then I'll jump back to the markets. AMD did trigger completely, put this out. So, I mean, AMD was the only real semiconductor play I liked. Why? Because it was sort of holding in there with performance with the SMH breaking down. Now, the SMH is rallying back, but the SMH also has a long-term sell pattern, pretty much hitting that first target, rotating back. Does the SMH have a little more room to the upside? Yeah. But I'd rather be in something strong like AMD rather than, look at the charts. All right. You see, this is a weekly chart of NVIDIA. So, we got a little reversal pattern off the harmonics. All right, but you don't see a major double bottom. You see something just kind of getting back to this breakdown zone. You see here? So even if I push a little higher, you're back in the daily rotation zone. Cycle's getting near the top. Could it run a little more? Yeah, sure. But would I rather be in this? If you had to choose one, it's why I pointed out this or this. Nice double bottom pattern above the daily rotation zone and above now the 50. Look where the 200 is into at least an advanced clear path move to right in front of the second target. Which do you think I'd like from a probability standpoint? This is what I'm trying to teach you. If you're going to play something, and we get bounce plays, but I really want everybody to think about this because this is super important. Again, does this chart, just as a chart pattern with a nice little double bottom holding this, you can even say somebody will call this horizontal channel is technically double bottom, and now even getting a close. The only downside is it's right against this prior support becoming resistance, but it closed above the 50. So even on a pullback, I'd rather be in this from a probability standpoint than this. Compared to this. Compared to this weekly, look at NVIDIA on the weekly. Looks like garbage. Even on a continued bounce, I don't have the high probability setups. We have resistance here. We have some resistance here based off the daily. It's got its little run up. We got cycles topping. It's into the daily rotation zone. This is not the stronger chart. This is the stronger chart. Does this mean it's guaranteed? No. But it means this has, especially since it triggered a probability pattern, this has a higher probability of success than NVIDIA, to me, and based off the statistics. So that's the kind of stuff when I talk about from the weekly sector overview, when I'm talking about stuff I like, especially in a sector that's got a sell signal on it, a weekly sell. When I say something's got to be in outperformance mode, this would be an outperformance mode versus NVIDIA, which is underperformance mode. I hope that makes sense. Now, do they still both have high PDE ratios? Yes. So am I expecting AMD to roll over again longer term? Yes, I am. But this is the stronger pattern. So I really want people to start thinking that way because it will help. And that's why you got to trade the patterns. You don't have to trade what you think. I mean, where's Waka Waka, Mr. Bearish mode now? Are we going to eventually set up for another short? Yeah, we are. And Waka Waka will be celebrating our next rollover play. But don't be shocked that we have a multi-day rally, because we're coming off cycle's bottom, turning back up. Look at the daily. Even just take away everything else. Just ignore the rotation zone. Where's your prior support being resistance? Prior support turning into resistance. Can it come up to easily kiss that off before a rollover? Yeah. Then we add our other information. Look at this overhead. We have a harmonic. We have the 62.5. We have the top of the daily rotation zone. Boom. Where do you think I'm watching for reversals? Now, we have a potential reversal to the downside, but it has not triggered yet. And this would be invalidated if this keeps rallying in Asia and Europe. It would probably could be invalidated before we open tomorrow. But it's a potential. Let me just go back to those levels. I really hope this is getting through to people. You got to trade what is, not what you think. So 41.12, and then major whole cluster area 41.33 to 41.51. That's a major cluster area. NASDAQ, we do not have a potential. And here's the thing. Remember I talked about a couple things this morning. If we pull back on that dip, watch this lower area with the rising 4-hour rotation zone. And look what happened this morning. Ignore this price action because let me just scroll it over. You see this? Let me show you on the 15-minute. Remember, I was watching this channel. A little breakout move to the upside. And then what did it form here? A double. Triggered. Straight down to the targets. I mean, you can't get any better than this. And then the reversal. And you combine that with like your 4-hour rotation zone. So I said, we'll watch this prior resistance becoming potential support with the 4-hour rotation zone and moving on up. So this is the kind of thing, putting the tools together to trade what is. This is not a, you see this little double in here? This is not a double right here because it's not reversing enough of a move. That just means you don't use the targets. Now, if we get a trade below this low that was formed with that 15-minute double top I showed you today, the low being 12,328.50, then I'm targeting this 12,231. Then we go into a clear path. And I'd rather use the clear path targets because we could easily return to the lows if that were to happen. Has not triggered yet. Next area on the upside, I'm still using this little area right here based off this longer pause. We have not, so about 12,600 and 12,701. Now, NASDAQ's just getting in that 50 to 62.5 if we rally a bit tonight. So then I will watch for that more substantial rollover play. We're into this key, very key area. Dow does have a potential double. Below 32,328, 32,046, 31,941, 31,893. Does it have to trigger? No. Could this keep marching higher? Yes. We have a potential reversal signal, though. Next area I'm watching if we get up in Europe is 32,700, then 32,780. So there, that's how we map it out. Look, between the 50 and the 60.5. So are we in a potential rotation zone and a potential topping area even if we push higher? Yes. All right. Let's see what else. Notes, as I talked about, this would be an absolute gift if it got back below the 75% and set up a double. That would be a gift because then if we triggered that reversal. Right now, going in tomorrow, I'm watching, coming back to that 50% of this up move. So I'm watching between the 50 and 62.5 for a potential bottoming pattern. If we close below that 62.5, then I'm watching for it to pull back and form a potential double. Because longer term, we have more probabilities that we are putting in a longer term bottom in notes. So, I think that's about it for today. Let's just check in on that VIX. Remember, we got that close below the 62.5. Now we've got between the 87.5 to the 100. So we fulfilled that. And in a continued rally tomorrow, I'm really focused on this 25 level. If we do break below 25, I'll be focusing on 23.50. But you've already completed the probabilities here, so there's no other pattern just yet. I will be watching to see how it reacts at these lows, which is roughly 24.95, 25 area. That should give us enough stuff to get through today. By the way, Tesla did complete this little double. You see here, partial gap fill actually got to close below 62.5. Then you had conflicting signals because the double already triggered. But with the NASDAQ rallying, had to go with the double play. Remember, that's why everything is not 100%. But coming up and completing that double. So that play is done. We will review any Tesla plays tomorrow morning. So you'll have to tune in then. Boy, and a little later with some people today. I think I know I pissed off some people with my Elon comments. But you know what? I'm going to call it as I see it. And if you don't want to watch the channel because you don't like what I have to say, then that's fine. You know, it's pretty much free anyway, so it's not like I'm losing revenue. Thank you, Ken. We'll look for any more Tesla plays tomorrow. Wavy, yes. And remember, we're still in options expiration. And this Friday, and we're entering the potential bigger zone for some topping patterns. So, yes, there is still upside potential, but we're going to watch for those. We're not just going to go short because we want to be short. We're going to watch for potential reversal patterns as it gets closer and closer, especially tomorrow afternoon and Thursday. All right. I hope everyone has a wonderful, wonderful evening. I hope you learned something from today's session. By the way, I did put up, thank you, Ted. I did put up an interesting article. It's not picking on Elon, although I think he's totally full of crap with this Twitter thing and everything else. But there was a really good summary by a very smart person who is, if you didn't read it, it's in the article section on our Discord channel. It's based on the guy's a really strong ex-M&A guy, and he looks at the deal in a lot of different ways. So it is fascinating to even follow if you're not into and you haven't followed in the past a lot of mergers and acquisitions. Now we're watching a merger and acquisition with the Elon component, but it's an actual very good dissection of what's going on. So because it's fun to watch some of this stuff. It's really fun to watch and how this will play out. So that's why it's actually just fascinating to me. So I'm just curious. I posted that article because I thought for insight, if you want to learn and you want to learn how M&A deals can work or fall apart and what specific performance is and what the out clauses are and everything else, it's a very interesting read. I'd suggest everybody who's a member of our Discord, please do read it. I put it up there for education. With that, I will talk to everyone later. By the way, if you want to join the Discord server, it's a very inexpensive one-time fee, like $10. And you can see everything that goes on in Discord. I will chat with everyone later. Everybody have a wonderful, fantastic evening. As always, in this tactical trading mode, if you don't have a trade, don't force a trade. Wait for the setups and then execute the trades. With that, I will talk to everyone later. Bye.